The U.S. Commerce Department imposed duties of more than 400% on steel imports from Vietnam. The U.S. is accusing some businesses of shipping products from the Southeast Asian nation to evade the levies in a further escalation of tension between the two trading partners. Joining us now is Bart Van Ark, the Conference Board Chief Economist, along with Yahoo Finance's Krystal. Let me start with you, Bart. We were warned by President Trump this was coming. He was talking with Maria Bartiromo over at the Fox networks. And he said that Vietnam is the worst abuser. I mean, his focus shifted from China to Vietnam. Should anyone be surprised by this tariff?
No, I don't think we should be surprised at all, to be honest. I mean, tariffs is something that's really on the president's mind. He's using it not just for economic reasons, but also for political reasons internally and globally. So, the fact that this was going to come up, I think is no surprise at all. Even if we would get a resolution to the China-U.S. Negotiations anytime soon, we have a lot of other cases to deal with, including other Asian countries, also including some European countries that I think we should be concerned about. So this is an ongoing saga.
And yet, Krystal, you see consumer confidence still somewhat strong in Asian countries, I mean, globally, right?
Yes, so in the report that released today by the Conference Board, that the consumer confidence in China actually has been very steady and healthy. So Bart, my question for you is, we have seen that the China's domestic stock market has been crashed and there has been some pressure on the local currency, but why on the consumer side they still have the high level of confidence there?
Yeah, that's a great question, Krystal. And you're correct that, our consumer confidence index that we released globally today, as you can see here, 64 countries, is overall actually holding up pretty well. Globally, consumers are more optimistic than pessimistic. It even increased a little bit from 106 in the first quarter to 107 in the second quarter. But to your specific point on China, in China it has remained stable, even at a somewhat higher level, 115. So that's a good record. I think what is happening here is that, first of all, the consumer is a little less exposed to all these issues around trade disputes than businesses are. So they're looking much more at what is the domestic situation. So I think that is one factor. Another factor is that even though China is hurt by those trade disputes, the government is continuously stepping in with stimulus programs and so on to ease the pain, and particularly ease the pain on the consumer also. So I think the consumer is shielded from this a little bit. But let's keep watching this, because this is a hard thing to look at. And overall, we do find that these trade disputes are beginning to wear off on the consumers globally also a little bit.
Yeah, Bart, this is Shauna here. How long do you think that the consumer can be shielded from this? Because we've talked about this time and time again, that the Chinese economy is hurting a little bit. There's also questions just in terms of the potential backlash that a lot of these U.S. companies could potentially face over in China. So how long could this really go on for?
Well, it depends on a couple of factors. I mean, frankly, the most important thing for consumers, and we do ask them that, is that job prospects and their personal finance, and that those two things determine their intentions to spend. So as long as the job market remains strong and as long as they do see improvements in their income, their confidence will remain strong. But, if this story goes on and if we keep talking about it in all our interviews and in the media here, they hear this also. So, for example, in the United States, where in addition to this global index, we also do a monthly consumer confidence index, we find that for the month of June, we actually saw a decline of consumer confidence in the U.S., and we do attribute that to a significant extent that the consumers are getting a little bit exhausted by these trade disputes, and they're worried about this impacting their prices of their consumer goods down the road, and that, of course, would have an impact on their confidence.
So Bart, you mentioned that in your June consumer index in the U.S. customers actually fall into a point that's the lowest in 2 years. What are major concerns you have heard from U.S. consumers?
Well, as I mentioned, U.S. consumers are still confident about the job market, but they're also seeing that, the speed by which we've been adding jobs over the last 2 years is coming down a little. They feel the tightness in the labor market. That's good for them because they still, therefore, make better money. But they also know that this is not going to continue forever. So that's what they're really focused on. But I do think that if there's a continuous conversation in the media and in the political circles around all these trade tensions and the fact that, we're threatened and that we're losing our competitiveness, consumers are beginning to worry about it. And we do see that now reflected in some of the latest numbers on consumer confidence, but not yet in the results that we're showing here today, which are for the aggregate second quarter, where even in the U.S., the consumer is still holding up quite well.
Bart Van Ark, the Conference Board Chief Economist, and Krystal, both of you, thank you very much for joining us.